The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody, and welcome to the Glasses COVID-19 webinar. My name is Santo Amadeo, and I'm the Glasses UK Country Manager. In today's webinar, our presenters will talk about the impact of COVID-19 on the UK automotive market. They'll cover what has happened so far and what we can expect now that social distancing restrictions have somewhat been eased and that car dealers have, as at the beginning of this month, allowed to reopen their doors. Presenting today, we have two of our industry experts who will talk about the COVID-19 impact, not only in the UK, but through the wider European automotive community. Our first speaker is Anthony Machin. Anthony is the head of content and product at Glasses. Prior to joining Glasses, Anthony had extensive experience working for OEMs and leading auction companies. He is also an accomplished speaker and has presented at many industry events and seminars in the UK. Following Anthony's presentation, our next speaker will be Christof Engelskirchen. Christof is our Autovista Group Chief Economist, who, as a forward thinker, helps us predict trends in the automotive industry and how they will impact on our businesses. Christof's presentation will focus on the wider impact of COVID-19 across the European automotive community and will draw insights from our newly released COVID-19 tracker. At the conclusion of Christof's presentation, Tim Budgeon, the Sales Director of Glasses, will wrap up with closing remarks and will direct you to who you can contact in our team should you require any further information about our presentation. But before we kick off with these, there are a couple of housekeeping matters I need to mention. Firstly, there'll be a Q&A session at the conclusion of the presentations where Anthony and Christof will be available to answer your questions. If you have any questions during any part of the presentation, then I would encourage you to use the chat function located on the right-hand side of your screen, and we will endeavour to answer these questions during the Q&A session. Secondly, and lastly, all webinar delegates will have their microphones muted by the webinar coordinator so that the only voices you'll hear is that of the presenters. So thank you, and with that, I will now hand over to Anthony to commence his presentation. Over to you, Anthony.
Thanks, Santo. Okay. Good morning, everybody. If we look at what's happened during lockdown, it's kind of affected everybody, all in different ways, but it's affected a lot of industries more severely than others. And I think automotive is one of those industries. The lockdown is starting to be eased, and we're starting to see some data coming through in larger quantities right now. At Glasses and across the whole Autovista group, we've all continued to work throughout this period. We've been analysing data from both the wholesale and the retail markets. And although the industry is effectively paused across Europe, activity has continued, giving some indications of what is likely to happen once we properly reopen. Now that the dealers are reopening, and almost more importantly now, deliveries are kind of up and running for new and used cars, we're starting to see bigger quantities move and biggest quantities of registrations as we move through June. In terms of Glasses and who we are and how we sit in the Autovista group, we are automotive data providers, and we have data at every stage of the vehicle life cycle, right away from sort of birth, right the way to the end of the life. And really, the main data sets that we'll talk about today are trade values, live retail pricing, and forecast data. So we've touched on those today in a bit more detail. But our customers and you guys out there in the audience will come from manufacturers, your new car dealers, new and used car dealers, your insurance companies, fleet managers, body shop assessors, and maybe some of our salvage agents out there as well. But what's important about the Autovista Group is that we're able to see what's happening in the automotive market across Europe and even beyond into Australia. Our brands are there at the bottom. We have Schwacker, Glasses, Eurotax, and Autovista. And we use that power across Europe to be able to forecast more accurately and watch the market more accurately than any of our other competitors. So what's special about, let's take valuations. What's special about our valuations and how we calculate them? Okay. We like to think that our valuations are four-dimensional. And by that, I mean we look at wholesale. That's the auction, a lot of auction data that we get in every single day from every auction company. We also look at retail, and we have been doing for an awfully long time now. And that's important because we can see how both ends of the market and how that market is reacting. We then use statistical modeling with artificial intelligence to create a first pass of that data before we produce it, before we send it out. But before we send it out, the fourth step is the manual editing. Now, this allows human intelligence to really look at that data before we produce it, which makes it more accurate. Now, the guys in my team that do that editing have over 100 years of experience, and that experience comes to tell when we're really in this kind of situation where it's unprecedented. It's a word that's been used loads over the last 10, 12 weeks, but this is unprecedented because it doesn't follow any recession pattern that we've seen before. We'll touch on that a bit more, but remember the 2007-2008 recession was about credit. Right now, credit is at the lowest rate that we've ever seen in the UK, so it's not about credit. Let me move on. In terms of what we have been doing with our values moving through the lockdown and through this period when we've seen less observations, we've still reflected what the market has been telling us. Today, we continue to look and evaluate what the industry is doing, and our data sources are varied. Some is subjective and some is more objective. So by that I mean we get data, but we get to talk to the manufacturers, the leasing companies, and the dealers out there to understand how they're doing in the marketplace. And we do that for all of our data sets. Our data sets include cars, LCVs, motorcycles, and our leisure vehicles, the holiday homes, the touring caravans, and motorhomes. And the aim is just to get the best possible understanding of the UK market today and how it's likely to react to the COVID-19 pandemic. Now, although there is stark pessimism, and albeit that that's still going on, but the market is under real pressure right now, especially in combination with Brexit. There are positive shoots growing right now. With the dealers starting to open, we're seeing that we have the potential that actually the impact on our used cars in the UK will not be as great as in other European markets. And then by 2022, the UK should be recovering in terms of used car price levels, close to that as we had in January and February this year. So let's look at some realities. What do we actually know right now? So the new car market, I look in this in many different ways, and I'll take you through some of the dashboards that we produce for the new car market and the used car market. Each day, really, we can look at this on a daily basis from the auction data we have, but also the retail data. But let's look at the new car market. Due to the lockdown, the UK automotive market, as we all know, was pretty much paused. There were some sales and there were some online deliveries which went really well. And some dealers and some OEMs reacted better than others through this period. Now we see that a lot were very risk averse, especially the OEM dealerships, the franchise dealers, which was the right thing to do. But they may potentially have lost some ground to some of the independent dealers who have been more active, especially in selling used cars. Now, looking at the new car market, total registrations fell by almost an all-time record, down to February 1946 levels, so down 97.3% to 4,321. In May, there was some improvement as click and collect and click and deliver started to take some hold, so down just 89%. But we take some confidence that these levels were very similar across Europe, and Christof will touch on this a little bit later. Now, if we look at year-to-date registrations, they are down 51.41% versus May 2019. And I put the graph at the bottom. They are all May year-to-date figures, and it just shows in the recession of 2008-2009, there was a real drop in May 2009, but not as far as we've had this year, and that's important to remember. This year's new registrations are significantly down and will remain down. I'll come to a forecast a little bit later, but they will remain down significantly through the year with some recovery, but we'll not see recovery back up to the levels we've seen even in 2019, which was already a year that started to see some decline. I also like splitting things up by fuel type, and again, this is May year to date. May 2020 versus May 2019, and we can see that all of the fuel types except EVs are down versus last year. It is only the electric vehicle market that has seen quite a lot of retained demand in this period within new cars. Now that's probably to be expected. There's been a big push from the OEMs around EVs if they've already launched them. We may see some issues moving forward with supply and potentially some launches going back if this pandemic continues, especially if we see a second spike. But following last year, diesel continues to be less in demand. Okay, these figures are tiny, but there's less demand for diesel, and we'll probably see that moving forward as we move through the year and into the following years, as diesel becomes less popular and other fuel types such as the hybrids and the pure petrol and petrol mild hybrids become more popular, especially as their CO2 reduces and fuel consumption improves somewhat. Now moving to the used car sales in May. This really is a barometer of what's happening in the market. So like I said before, we look at the wholesale and we look at retail to ensure that our values and our forecasts are as accurate as possible. So if we just look at a bit of an overview of the wholesale market to begin with, now pretty much the wholesale market has mirrored what's been going on in the new car market. May auction levels were smaller than usual, but there have been significant increases as the auction companies moved online. The BCA have been using live online, and Machin been using simulcast, and the smaller auctions have all been trying to move. Aston Barclay were one of the first to start selling more volume online. Now they're all catching up, but we've got to remember physical auctions closed in March with the lockdown measures. Now they are permitted to open from next week. We've not had any confirmation from the larger auction companies as to whether they'll actually be doing that. So it's going to be interesting as we start to see probably more online auctions, perhaps more pure online, a bit like an eBay sale. We'll start seeing that through some of BCA's sale channels. They've certainly been doing buy it now sales, so potentially they could use their European model in the UK. That'd be interesting to see. But it's going to be quite difficult for them to be able to auction the volumes that they have waiting and also the volumes that are coming off fleet if they don't necessarily open physical auctions straight away. It's going to be interesting to see as we move forward over the next few weeks or so. But volumes in April and in May have remained low. First time conversion in April was 37.1%, but it did improve significantly in May to just over 60%. So things are improving on those online auctions. Perhaps as more buyers get used to using them, we see better conversion rate, which is excellent news for the market because things start to come alive. Average sales price, strangely, are a little higher than in 2019, although it's still good. The market continues to be active. So this is one of my dashboards. This is the wholesale market, and I was playing around with some figures last night. So I've got the latest figures on our sold volume index that we show here. When we talk about our auction data, we actually remove the data from British car auctions, but we have a representative sample from the rest of the auctions that we take observations from. Now we can see right at the beginning of the year, they were pretty much stable, but they started to fall as lockdown took hold. And around the 23rd of the 3rd, it really fell down. 33rd, right at the end of March was probably the lowest time. Then we started to see auction businesses starting to open up online in a bigger way. They found a way that they could logistically deliver cars as well as sell them. There have been auctions from people's offices, at home, where the cars have been somewhere else off-site. So it's just interesting as we head into this week, particularly, that volume has started to kick back, and we're starting to increase the volume sold at auction, which is great news. This is sold at auction, not necessarily the cars that have been they've gone round. And I say that because the next slide talks about first-time conversion. First-time conversion is a measure we see as the demand for a particular vehicle. That's when it just goes through an auction channel a single time. Now in April, first-time conversion really dropped down to a very low, under 40% for the whole market. The fleet profile cars that we looked at was a little bit lower, and the nearly new cars, the late and low, was even lower, around 10%. In May, it has risen, not back up to the level that we've seen before, the sort of 60 to 80%, but it's still a very strong market, and it is getting stronger. So the reports that my editorial team have been picking up from the online auctions that they've been attending shows that conversion rate is rising still further. Now the last chart here talks about sale price. Now sale prices, like I said in the previous slide, they've not really been affected too much. But we'd state there was an effect obviously in April, but May is starting to come back, which again is good news across all these sort of the sales types that we see at auction. So again, looking at fuel type split, I think this is quite important. It almost reflects what's happening in the new market, where EVs, that's the green line that we can see, has actually increased more quickly than perhaps the other fuel types. So it's really good news for EVs, albeit there are always fewer of those in the auction market at the moment, in the wholesale market, but we will continue to monitor that because that could affect our valuations as we move through the next few months. Hybrid, and that's pure hybrid, self-charging and FEV, have fallen significantly, and that they've not come back as quickly as perhaps we wanted them to, or perhaps we thought. So that's also interesting to watch. Petrol and diesel are coming back relatively quickly, but again, we monitor this on a very regular basis to ensure we can look at what our values mean to the marketplace moving forward. Looking specifically at the fleet profile cars, they're cars around 3 years old. This data shows that the strongest RVs here are actually for hybrids, but electric RV is starting to come back. This is percentage of cost new. So the EVs are really coming on track and actually moving potentially above diesel, according to the data we're receiving from the auctions. So again, this is important to watch, where EVs have been very haphazard in terms of their values. It's coming to move more in line with the traditional fuel types. So we just got to watch that as we move forward, and obviously that's important for values for when you're taking trade-ins, when you're selling these vehicles, and when you're trying to buy these vehicles over the next few weeks. It's likely that demand for these EVs is going to be quite strong. In the retail market, so I'm sorry, there's a lot of data here, but I wanted to show you that we don't just look at the wholesale market. We are very much in touch with the retail market. We use these values coming through to drive our retail transacted prices, retail observations, and retail asking prices that we have in our GlassNet tool and across our data sets. Now, the important thing to look at here is this second graph, the second graph down, which is headed sale observation count. Now here, these are our look at what is really happening in the market. At the beginning of January, the 20th of January, everything was working quite nicely. January into February, things started to fall away a little bit. At the end of February, things were back up, but March, there was a bit more kind of perhaps consumer confidence started to wane a little bit. There was more talk about COVID traveling across Asia into Europe and across Europe into the UK. When we hit lockdown, the sales just dropped away. Confidence went away from the retail market. Everything closed down. It was very difficult to buy a used car until perhaps the end of April, when click and collect became a possibility, a reality, both from the franchise dealers, but also probably more so from the independent dealers, which were really gagging to get as many cars sold as they possibly can. And we've seen that improve throughout the last few weeks, as we're up to 43% of what we had at the beginning of January, and that's on the 1st of June, just as things were starting to open. So over this week and over the next weeks coming up through June, we can see that sales will continue to get stronger and stronger. Now, the last graph is also important because this is average days to sell a particular vehicle. It's usually around 50 days that we see. It dropped from the start of the year, it dropped down to maybe 45, but it started to grow again, and it grew throughout the lockdown period, which is evident and it's obvious, and it's grown up to around, for the average sales to days, up to from 50 days to about 90 days. Now, we foresee this actually dropping over the next few weeks, but we will keep monitoring this market because this is very important data. Because if cars are moving slower, it will affect retail values because they'll have to start to change those sale prices, and we will start to see more reductions as vehicles stay on forecourts for longer. What is interesting, though, is that we also monitor the average days to sell the fastest selling cars in the UK market. If I can change the slide. Okay, whoops. I overtook myself. So we on a monthly basis, we publish this on the website, and it's quite interesting data because we look at our observations with a minimum of vehicles with minimum 50 observations, because that's important. Because if we just say one vehicle took 1 day to sell, and it might just be a special. So we look for the minimum of 50 observations to give us an indication of what's selling across the UK. We do this regionally, but this data is just for the whole of the UK. And what's interesting from this data is that it is higher mileage, lower priced, older vehicles that are selling quicker at the moment. This was in May. Things may change in June. This was in May, and we watch this on a regular basis. But customers currently are looking for older cars at lower prices and higher mileage. So they are looking for value for money. So that's going to be interesting because those kinds of things start driving what's bought at auction as well. So we may see a switch to more buyers looking for 6-year-old plus cars, the typical trade-in cars, and of course those trade-ins haven't been happening on new registrations. Okay. So we may see the values of those older vehicles starting to increase. Now, usually on this list, we see the likes of Dacia Sandero Stepways, which is one of the most popular used and fastest selling cars in the UK. But at the moment, the old Volvo 550 is in there. My old Land Rover Discovery 3 is in there, and we see some higher values with the Suzuki Alto. So again, value for money is what customers are looking for. Certainly were in May. So moving forward, we will look at some forecast data. There we go. And the next couple of slides look at what's been happening across new and what we think is going to happen for the rest of the year in new car registrations, and also look at what's happening with used car sales. So for new car registrations, this is our forecast. So we know what happened in January, February, March, April, and May. So pretty much down to halfway across the graph. Now in June, we predict that June will rise significantly. Now we've come past lockdown. July will have a reasonable uptick, but August will start to follow the typical typical seasonality and fall back down again. September, we see a good peak, but then falling off more quickly than we've seen in the previous 2 years in October, November, and December. Now, in March 2020, registrations were halved due to lockdown. April and May, there have been low sales volumes, mainly because physical retail outlets have been closed, so it's just been online business. So for the full year forecast, we are looking at a forecast at around 30% lower than 2019. Now that comes in at around 1.6 million units. Okay, for used car sales, which I think is a nice sort of look at the used car market. Okay, so for used car sales, again, the first couple of months were pretty strong, actually stronger than 2018, 2019. March fell away and April came down to, we're predicting will come down to pretty much nothing. May again, but June will bounce back, but bounce back to about 500,000 units. Usually the sales are pretty, we've looked back to 2014, we've looked at seasonality. The seasonality is pretty flat in used car sales. Okay, the last few months fall away quite rapidly. We see a peak in June. We then see a fallback in July, but in August, September, there will be some recovery, and then it will again recover back to what's been happening in the previous few years, October, November, December. So Q1 declined minus 8.3% to 1.8 million across Q1, according to the SMMT. There was growth in January and February, like I said, 2.9 and 4%, but March fell away. So we see the full year forecast of used car sales at around 31% down versus 2019. Okay, that's the end of my presentation. I'll hand back to Santo. Now, if you have any questions, please put them into the chat and we'll try and get to those later on. Thank you for your time.
Thank you, Anthony, and thanks for the presentation and the insights. I'll now hand over to Christof, who will talk to you about the wider impact of COVID-19 across all the markets that we operate in, as well as show you some of the information that we're gathering now in our COVID-19 tracker. Over to you, Christof.
Thank you, Santo, and thank you, Anthony. So we wanted to give you a bit of context of what's going on in Europe, in the European markets, in order for you to feel a bit more confident also about the UK and how our forecasts for the UK have been created, and you know how they measure up. And I think this is important, and that's why this is why we're doing the webinar as well. When you look at the EU28 passenger car market, and these are new car registrations, you can see that it's not a growth story. We are merely back at at the levels we were in the beginning of the 2000s, and most of the money was earned when you talk about new car sales and margins abroad, in China, for example. But even there, even before the pandemic hit us and hit China and hit Europe, there were signs of a slowdown of the passenger car market and the automotive market. So some of the problems we see are not just tied to the COVID-19 situation. So when you look at the economic outlooks, they have become gloomier, but they are bottoming out. So first of all, before the lockdowns came in place, we saw forecasts of around 2% growth of the gross domestic product globally for 2020, which is really not a lot. And this is what I was telling you earlier. There is a slowdown in the economy that had already been observed towards the end of last year. For Europe and for the Eurozone in particular, we were at about 1% of growth estimate. Now, in May 2020, there was another outlook, and this outlook for the full year of 2020 has now come down quite a bit. It's more negative. So we have global GDP estimates down to -4% for the full year, Eurozone to minus, and sorry about this. So these outlooks are all ballpark figures. There is really no institute that says that they know what's going to happen. There's no blueprint of this type of pandemic / economic crisis, and therefore we see some more positive and some more negative, some outlooks floating around. So let's move on to the European chart that Anthony showed for the UK, and this is now for Europe, including the UK. So cumulated for January until April, we see a drop in new car registrations by 40%, and the estimation or the estimate for the full year is something around 25% to 30% of lower new car registrations than in the year before. It obviously depends on how tactical some of the manufacturers, the OEMs, are becoming, but this is one of the impact or one of the parameters that is actually more positive in this crisis than in the crisis of 2008 and 2009. So the supply side pressure is lower, which helps used car markets. So when we talk about scenarios, because this is what we did for the third time now in our latest white paper, which you can download for free. The link is down here. You go to our group website, autovistagroup.com, and there is a gateway called Coronavirus Gateway. You can download the white paper. It's been published yesterday. 18 countries are included. What we did there is we looked at the various parameters that are relevant for used car markets in this situation. So how the pandemic continues, whether the virus is contained. And in some markets, there's a feeling that the virus is under more control now than a month or 2 months ago. GDP obviously should have an impact on used car markets as well. So that's a factor. How private consumption is evolving is another one. And supply side, as I mentioned before, is actually playing a positive role in this crisis because there is so little new cars coming to market that should help ease the pressure on the used car market for the time being. It cannot fully compensate it, but it does help ease the pressure. There's also a lot of fiscal and monetary policy action happening more than in 2008 and 9 and more quickly as well. So that's also a positive. And then we have some country-specific factors, for example, exchange rate, or in the UK, the fact that the market is a pretty closed market in terms of cross-border flows, in terms of exporting, importing used cars, which is also helping used car markets in the UK. So these are the scenarios that we have. So scenario 1 is what we describe as a swift V-shaped recovery. Probabilities are very low, so almost no country expects that scenario to happen. The majority of countries do allocate themselves in that medium risk scenario, which we coined or which we called slow U-shaped recovery. The positive momentum of this crisis, of the economic crisis, should come from markets like Czech Republic that had been more dynamic and more elastic even before before the crisis. Germany, for different reasons, because in Germany there is a lot of wealth that is also available to to support the markets. A lot of stimulus activity is happening here. And you have other markets like Poland and Slovakia who also believe they could become a bit more of a growth factor, compensating some of the decline more quickly. But the majority, as I said, is in that scenario, and in the UK, as Anthony alluded to, is one of the most severely hit markets in terms of economic crisis as the combination of Brexit and the pandemic plays out. So let's look at some real data in terms of what's happening on used car markets and price realization. I think this will be helpful for everyone in the UK as well, because you can see here on the bottom, Finland and Sweden, they did not have a lockdown in their market. Sweden was particularly relaxed about the pandemic, Finland less so, but the dealers remained open. And you can see that markets reacted relatively quickly to the uncertainty around the economic impact of that crisis, and they are down 3%, both markets. The other markets, and I've put in here Italy and France, but I could have shown Germany, Austria, and many other markets here. You cannot see the impact on used car market transactions just yet because the markets are open too short, and the activity and the pricing and the adaptations that we expect, we just don't see yet, but we anticipate that it will come with a bit of a delay. And I wanted to show you another slide from our COVID tracker. This is something you can get access to, by the way, as well. There are free trials available if you wanna check it out. Market coverage is quite strong. UK as well is included in here. During the ramp up, this was a learning also from markets like Austria, but also Italy. What's happening first is that the inventory is reduced because there had been inventory built up, and that needs to be worked on first. So you see activity of dealers about removing used car adverts, which is a proxy for selling used cars. That's really growing. So they are cleaning up and they are getting rid of old or aged inventory. They're almost back at the levels pre-lockdown. Yeah, so this is where we started. That index. So we can see that Austria has been out of lockdown for the longest, and you can see that activity has really come up to a similar or same level as before. The other topic, though, is what's happening with new advertisements coming into the portals. So this is a proxy for, is there new used car supply coming into the market, and there isn't so much coming just yet. So we are still about 40%, 30 to 40% below levels pre-crisis. And again, as a reference here, the UK, obviously just ramping up. There is not so much happening with new used cars being made available to the market. And we also tied residual value forecasts to our scenarios, and you can see here how we clustered them according to the scenarios. So the UK and Romania actually as well were very serious and negative about the economic outlook, but the impact on used car markets is quite different. Whereas Romania is economically not in such a strong position, believes they will suffer a lot in terms of private consumption, and that will really push residual values down. There is the UK, which is also negative about the economic scenario, but looking more positively on used car market prices because there is so little new car supply. The British pound is relatively weak. Yeah, so people might look for a used car, and that will support used car price realization. As I said, we have a bit of a more V-shaped recovery in some of the richer, more dynamic markets, and we have the majority of markets in that medium risk scenario, which is more of a U-shaped type recovery scenario. And I also wanted to show you what's the difference between this crisis and the one that we saw in 2008 and 2009. On the left side, you see Spain and how severe the impact was during the financial crisis. We were talking about 15% on average decline of residual values and the pressure that built up over 18 months. There were some segments affected much worse than this. And you can imagine, if you look at Europe, 1% of used car value decline has impact also on the new car markets, by the way, because it makes leasing more expensive. But the loss in value on used car and new car market from 1% loss is around 4 to 5 billion euro. And, you know, depending on how quickly this can be recovered, those are annual costs, yeah, to all industry players. So looking at a scenario like this, Spain, 5% down, is dramatic or substantial, but it's not as dramatic as it was in 2008 and 2009, and that should give us, some hope, that this crisis can be recovered, that we can recover from it more quickly. Spain is amongst the most negative outlooks that you will see in our white paper. And Germany, just as a contrast, has a much lower anticipated decline, around 2% in the relatively quickly, and then keeping or relatively constant on that level. They saw 12% decline building up over 18 months. So for them, it's also quite a different situation. And there's one slide that remains. I wanted to talk to you a bit about the risks and opportunities that we see and that have not yet been reflected in our forecast. So there might be a second or third wave of infections. I think people or experts, if you hear them talk, they say it's not unlikely. And if that hits us, I think we need to reshuffle all the projections in the forecasts again. But let's hope it doesn't. The other risk that is a bit, I would say, a bit closer to home is a W-shaped recovery scenario where some of the support that is given to private and also industry is going to mask some of the underlying issues that we have in some of the economies, and that companies might just go bust a bit later than had they not been supported. And that's a scenario and a risk which also people have not yet fully quantified, and it's not reflected yet in our forecasts. Also, the increasing supply side pressure is a certain risk, and if you imagine that there is no rental registrations happening this year, or very little rental registrations happening this year, somewhere, somehow, cars need to be registered, and if OEMs push too much of supply of cars into the market, that can increase the pressure. On the positive side, I also wanted to show you some positive opportunities, which may be a bit more tactical. So cleaning out stock of undesirable cars is something that dealers right at the beginning of the lockdown should really focus on. So cars that had not been easy to sell prior to the COVID-19 pandemic is probably the first thing that you should get rid of. Realize some losses potentially, but really focus on high quality used cars that will stay very attractive. So latest models, etc. I think you cannot really say that there's anything positive coming out of this crisis, but there are certainly some areas like e-commerce and new business models that are seeing a bit of a push through the crisis, and it's an opportunity as well as a must-do activity for all players, for dealers, for OEMs, for also startups to really embrace those new business models. And I'm talking not about car sharing, I'm talking more about enabling the sales and marketing value chain to become a bit more online. I'm talking omni-channel, so there will not be a one or the other, but you've got to work on digitizing the sales and marketing value chain. And then an opportunity for some brands, for some OEMs, it's an opportunity to rethink capacity. And if as an industry we take out a bit of the capacity of new car production out of the market, that would certainly help used car market price realization. Thank you. And with this, I would like to hand over to Tim Budgen.
And over to you, Tim. Thanks very much, Christof.
Good morning. Good morning. Apologies about slight delay. Thank you very much for everyone's attention. I'm now going to just wrap up what's been quite a fascinating session. So thank you very much to everyone that's been listening, for everyone's attention, and big thank you to Anthony and Christof. I'm sure everyone will agree that was both fascinating and insightful, and clearly shows what a powerful tool residual value intelligence is. And to have all that information and level of detail at your fingertips, you know, can clearly show you how to steer your way through these challenging and unpredictable times, but also give you a great way of staying ahead of your competition as well. My name's Tim Budgeon. As you can see, I'm Sales Director, and along with my colleague, Mr. Paul Marklew, Head of Business Development for Glasses. We'd very much love to hear from you if you're interested in finding out more about RVI and how it can help you run your business far more profitably and effectively. We can arrange a demo, and you can see for yourselves exactly how intuitive and interactive it is, and we can also set you up with a free 7-day trial, so you can take it away, have a look at it in more detail with your teams, and again, you'll quickly realize how powerful this tool is and how it can really save you time and money. So do get in touch with Paul and I. Our contact details are there. You can either take a screenshot, take a picture on your phone, or reach out to us via LinkedIn. But also open to any questions that you want to pop into the chat function as well. But big thank you for your time, and we look forward to hearing from you in due course. So I'm going to hand back to Santo, who is going to cover off any questions that we've had through the presentation. But as I say, do get in touch. We'd very much like to hear more from you.
Thanks very much. Thanks very much, Tim. Thanks very much, Tim. Look,
no worries.
There are a couple of questions that have come through. And Christof, I think this one might be best for you. What does COVID-19 mean for the car sharing industry?
Oh, so I just got unmuted. Thank you for that. Yeah, I mean, there are some short-term impacts, I believe, that will happen. So some of the business models that make a lot of sense, like car sharing assets, will struggle as long as people fear that they could get infected, yeah, or that more social contact or more contact, like in public transport, but also car sharing, is creating a bit of a challenge. So we know that these business models are struggling. They have been struggling before, but they are struggling now in particular because of the pandemic. But what I believe, and what I've also discussed with others, is that a lot of these behaviors and things that we see, they will not last for long. So there will be a time after the virus, and then these business models will be back to the levels that they were before, because actually they do make sense as a concept.
Thanks very much, Christof. There's another question, and this one might be best answered by Anthony. Anthony, now that dealers in the UK have reopened their doors, what can we expect? What level of activity can we expect in sort of the second half of the year in terms of new car sales and used car sales and residual values?
Thanks, Santo. I think in terms of the activity, we're going to see a lot of activity this month. There's been a lot of pent-up people ready and willing to take delivery of cars and buy used cars. We've seen that already. New car sales are starting to increase substantially. I think there are certain things that are going to hold back sales though, and part of that on the new car side is supply. Although probably not this month and probably not next month. I think because the franchise dealers haven't registered cars for going into March, there's going to be supply around. I think one of the things that will hold things back, though, will be the logistical operations of getting those cars to the right places, the right dealerships, so that they can actually deliver to customers who want specific cars. The other thing that's going to start reacting in the market as that pent-up demand diminishes will be consumer confidence, and that consumer confidence will be driven by knowledge of recession. I'm sure the news channels will be, talking more around the recession and what that means, how long it's going to last. Probably once the R number goes down to something that's probably more manageable. But we can't forget about the job losses that are happening, not necessarily just in our industry, but across other industries. There was something on the news this morning about a restaurant outlet that will be closing a significant portion of their stores. We've seen redundancies announced across airlines and airline suppliers, Rolls-Royce with 9,000 jobs in Derby. These things will drive consumer confidence, and those headline numbers aren't necessarily the full picture, because always, just like in the car industry, other industry have supplier industries, and those suppliers will be the widgets manufacturers, there'll be the cafes, there'll be the burger vans that are outside the factory. Those kinds of jobs will start to diminish. So we've got to keep our eyes on that. But these are the things that are gonna help with demand. I saw a question come in on the chat just before, which was, how can I sell more used cars during COVID? I think my advice there would be, as usual, use the data. Now, we are very lucky in Glasses at having two data sets, and the data set that drives trade or trading values, and the data set that drives the retail values or retail pricing. And the idea for you right now will be either to maximize margin or minimize days on site or days to sell. So using the data that we have available in all of our products will really help you sell the cars for the right price. I'm not talking about reducing those prices at retail, because those customers right now are coming in. So now is not the time to reduce. But you've got to look at how you're stocking and the vehicles you're stocking. That fastest car to sale slide that I showed, it looks like a lot of customers are looking for value for money right now. Now, that might not be the ancient cars, but it might not be your fleet style cars. It's probably cars maybe 4 or 5 years old. So just make sure that you target your customers accurately, use the data as much as possible. Santo.
Thanks very much, Anthony. There's a further question here, and this relates to OEMs, and with the what's happened in the last couple of months, will we see now a reduction in the development and investment in new models, and will we see sort of less innovation than what we've seen in the last few years in new model development?
I'll take a bite of that to start off with. Oh, Christof, you go ahead.
No, take it.
Oh, really? All right, thank you. Certainly, the way I've been looking, so I worked in development at JLR, and certainly how things have progressed over the years, it's all about money coming in. Now, there's been a stop. They've not been able to sell cars. OEMs are looking at ways of developing cars in the future. There are things that they will have to adhere to. So things like legislation will always need to look at, and things like the CAFE targets for CO2 emissions will not go away. So as we progress through this year, the delayed launches on the things like electric vehicles, the new mild hybrids that are coming on board for both petrol and diesel, and the other self-charging and PHEV hybrids that are becoming available will still be launched. What may go off the table, perhaps in the medium term, will be things like autonomous driving vehicles. They're not a requirement, it's a nice to have. So some of those projects may be pushed further into the future. Time will tell, but certainly the way the manufacturers are looking at the moment, they want to get their new cars into market as quickly as possible. They'll have to sort out the logistic issues that they have, but that will, for the research and development, some of those budgets may be limited, certainly in the short to medium term. Christof?
No, I would agree. I mean, we're talking first of all about preserving cash, and this is something that everybody at the moment is doing. So whatever you can conserve, and some of the investments required are so massive, will be conserved. So we will see delays in launches, absolutely, and we will see some budgets being redirected or reprioritized. I mean, personally, I think that some manufacturers might jump on the Android Auto OS train because they realize that they cannot develop such an ecosystem alone. So that might be something that is reprioritized. Investments in autonomous drive, as you said, as well, and potentially, and there were some announcements already, hydrogen. While this is clearly an important area of development and clearly also a future, might also see some pushback, some big delays, but not electrification. That will continue to plow through with full force. Yeah.
Thank you. I've got one more question, and this relates to residual values. With the lack of sales activity in the last couple of months, what information can I get to ensure that I have the right information for buying and selling cars? I'm concerned about the lack of information at the moment, and I'd like to know what I can access to help me make sure that I've got the right vehicles in inventory and selling and buying them at the right prices.
Okay, I'll take this one. I think, as Tim mentioned before, some of our data is available on the RVI application. Now, this will allow you to take a look at what's happening in the market. We have a specific COVID-19 hub, and it's definitely worth talking to Tim's team, Tim and Paul, about what that can give you. It really gives an indication of how you can sell that vehicle right now. Now, the vehicles that are available in the market today are just the same as they were at the beginning of March. So we've got to look at how those vehicles can sell and who your target customers are and how you can price those vehicles accurately. So again, I would look at the data and use data to really move on and look at where the market is going. So we will do our best to forecast things like RVs and forecast the market, and we're using as much data as we possibly can. Like I said before, Glasses use both retail and trade data to set all of our values to make them as accurate as possible. So the data is there, the market is still alive, and it's really starting to pump now. The heartbeat is coming back. So as we move forward, our data will move forward with the market.
Thank you, Anthony. And look, there's one more question, if that's okay, and that's relating back to car companies again. Will car companies need to change their production processes to enforce social distancing, and what will that do to new car supply and new car prices as a result?
I mean, yes, they will, and we've seen some manufacturers opening production plants, and then there were COVID-19 cases, and then they had to close it again and reopen again. So it's if you look at, you can Google it, you can find videos. It's completely different, to what it was before. Quite stressful also. Working with masks, and it's tough. So yes, this will lower the output of cars.
Yeah, we're seeing the same in the UK factories as well. So Halewood on Merseyside for Land Rover opened just a few days ago. They produced their first Land Rover coming out of there a few days ago. But it's all about a slower production line building fewer cars, which will affect supply. In terms of pricing, we don't know as yet. The pound is still weak against the euro. We import most of the cars into the UK, so we're yet to see any price differences. But again, we will reflect that in data as soon as we receive it.
Thanks very much. Unless there are any further questions, the hour is up, and look, I'd like to thank everybody for attending this webinar, and I'd like to once again thank the delegates, the presenters for their excellent presentations, and I wish you all a good day, and hope you have a successful month ahead. Thanks very much.